Good morning, good afternoon, good evening, depending on where and when you are watching this video. So today we are going to be having a discussion on the OHADA accounting rules for non-profit organizations. We all know that as from the 1st of January 2024 came into force this Uniform Act, and uh, we have been expecting the English version since then. Unfortunately, and to the best of our knowledge, we have not yet seen the English version. So we took upon ourselves to do a translation and provide a detailed uh, description or analysis with you. So the video will be done in two parts. Part one will have to do with the review of the various articles that lay the foundation of non-profit or the non-profit accounting. So we are we'll be going through the various articles, explaining what they mean, explaining what we understand, and explaining the impact that those articles are bringing in the operations of non-profit organizations. While part two will be the it will be similar to an application guide. So we are going to look at how in practice it is being done. We are going to look at the chart of account. We are going to look at the financial statements in details. We are going to look at how transactions are being recorded both in the various non-profit entities. So stay tuned and let's go. So we know that we have the OHADA treaty that was first of all signed on the 17th of October 1993 and revised on 17th of October 2008 in Quebec, I believe. And on January 26, 2017, there was a revision of the Uniform Act on Accounting Law and Financial Information. So what we call OHADA, the revised OHADA or OHADA revisit. So you discover that since the 1st of January 2018, we are now talking about OHADA revisit, and that was for profit making entities. So, given that the profit-making entities had a good foundation for establishing their financial statement, keeping their accounts, it makes it easier for reporting. It makes it easier for comparison of organization within the OHADA states, and it brings a sort of uniformity in the way information or financial information is being produced. But that was not the case with non-profit entities, whereas the flow of cash within the non-profit entity is equally consequential. So there was a need to develop this Uniform Act in order to harmonize the way non-profit will keep their accounts and produce their financial information so that it can equally be of great use to a wide variety of users. So in 2022, in Niamey, the Council of Ministers sat and unanimously adopted this Uniform Act, and it came into force from January 1st, 2024. So all non-profit entity as defined in this Uniform Act are expected to keep accounts and produce financial statements as precise. So we are going through the Uniform Act itself, and we are looking at the various articles. So chapter 1 is looking at the general provision, so the definition of some concept, um, the laying of the foundation of this Uniform Act. So it says that a single accounting system, which is common to the member states of OHADA, called the accounting system for non-profit entities, is established and annexed to this Uniform Act. So you see the abbreviation is CIS-BNL. We have decided to maintain the abbreviation as it is. So we are professionals in accounting, so we can do a translation based on our understanding of French and English and use the appropriate words. But there are situations where we don't want to go far from the French version, because when you do a translation, and if you do a deep translation, sometimes you might miss some ideas of the original language. So that is why we keep even the abbreviation. We prefer to keep the abbreviation as SIS. BNL, Système Comptable des Établissements à But Non Lucratif. So you might wish to use another abbreviation, but since OWADA has not provided any official version in English, so we stick for the moment to the French version. So Article 2 is going to define what a non-profit entity is, and this Article 1 just states that all entities that will fall under that definition will need to be subjected to to the provisions of this Uniform Act. So Article 2 states that a non-profit entity is understood to be any organization pursuing a disinterested purpose and whose resources generated, if any, by the activity are used for the operation and achievement of a social purpose. So they are not there for economic purpose. They are not there for profit. They are there for an disinterested. So it's a social purpose. It's just to help, is to assist, is to bring an equilibrium, not to make gains. So or any entity that has this, that falls under this definition, is considered to be a non-profit organization in the sense of OWADA. So OWADA has tried to group these entities into two. So on one part, they have spoken about the association and professional orders, and on the other part, they have spoken about development project. Association and professional orders, what we need to understand is that you need to uh, you need to understand it depending on the definition that OWADA has given, because what you understand as association is on just one part. That means an entity where people come together for a charitable purpose, for a non-profit purpose. You know that okay, it is an association. When they have not yet gotten the authorization to act as an NGO, it is an association. But here, OWADA is defining and putting into association elements or entities like churches, mosques, football clubs, political parties, charitable organization, or everything enters into association. And professional orders, in professional orders, of course, those are legal entity which are often backed by the state in order to represent a profession, regulate that profession, and defend the interests of that profession. So we have uh, call like the Cameroon Bar Association, we have call like ONECA, the Medical Corps Association, and so on and so forth. So this is one set of non-profit organization in the sense of OWADA. The other set of non-profit organization is the development project. So entities whose purpose is the management or administration of development project that is generally financed by either bilateral, bilateral, multilateral, private or state donor. So this is another set of non-profit entity in the sense of OWADA. So you will discover that development project here itself, you should understand the definition in the sense of OHADA, because if you are somebody working for a non-profit organization, an NGO, for example, you will discover that the definition given to development project is different in an NGO, because NGO will differentiate between emergency projects and development project. Emergency projects are punctual projects that are being financed still by bilateral, multilateral, private or state donors in order to satisfy an urgent and emergent need at a particular point. So generally they are short-term project of 6 months, 1 year maximum, while development projects are long-term projects that are striving a long-term impact. Yes, so the difference is that for emergency project, we want to save lives at this moment. In a development project, we want to have a long-term impact. So we are trying to reinforce the capacity of the local communities in order for them to be capable to take care of themselves in the long term. So that is in the sense of an NGO, but that is not what OWADA is saying. OWADA is saying that all those projects being financed, if you are there to receive funds from bilateral, multilateral, private or state donors in order to implement an activity, you fall under development project. Hope that is understood. So the entities mentioned above, when they are not subject to the public accounting system, a particular accounting regime or specific national provisions are required to establish an accounting system called non-profit accounting. So here it is just reiterating that there might be in the definition, there might be some entities that fall in the definition of non-profit organization in the sense of OWADA, but who are already subjected to a different type of accounting system. For example, a public administration that is already, because a public administration is non-profit, but it is already subject to public accounting. So you have United Nations agencies. United Nations agencies are already subjected to the IPSAS. IPSAS is International Public Sector Accounting Standard. So those entities are not falling within the definition, or they are not subject, even if they fall within the definition of non-profit in our other sense, they are not subject to the to this Uniform Act. And there are some uniform acts in the there are some articles in the General Uniform Act for profit-making entity that also concern this non-profit, but there are some particularly that do not have anything to do. So the entities mentioned in Article 2 was defining the non-profit entity. So the articles of the Uniform or the Uniform Act can still go here, except for the ones mentioned here. So you have 5, 8, 10, and so on and so forth. These are articles that precisely have nothing to do with non-profit entities. So that was the general provisions. That was the definition. So we all know what a non-profit organization is in the sense of OWADA, and we already understand that they have been grouped into two. We have association and professional orders. That is one set of non-profit organization. Then on the other hand, we have development project. That is another set of non-profit entities or organization in OWADA sense. So let's go ahead and look at the annual financial statements. What are the annual financial statements? What are they constituted of? How do they look like? So Article 4 states that a complete set of financial statement will include, remember that we have two set of non-profit organization. We have association and professional orders. We have development projects. So the financial statement also will be two sets. There will be two sets. There will be one for association, professional orders, and there will be another one for development projects. So Article 4 continues to say that a complete set will include, for association and professional orders, we have the balance sheet, the income statement, the cash flow statement, and the notes. So the balance sheet we all know what the balance sheet is, we all know what the income statement is, but here the income statement does not have a profit or a loss. The income statement will have a net, a positive balance or a negative balance. That is how we are going to call it. We are not going to call it a profit or nor a loss, because the objective is not to make a profit. The cash flow statement is since 2018, 1st of January 2018, we are not talking in OHADA. We are not talking about the cash flow statement. We are no more talking about the TAFIRE, because at first we were talking about the TAFIRE, but now we are talking about the cash flow statement, because we are trying to bring OHADA closer to the IFRS standards. So, and equally the notes, since 2018 in OHADA, we are no more talking about annex, we are talking about notes. So at first, OHADA will say, okay, we have annex to the financial statement, but since the IFRS spoke about notes to financial statement, bringing OHADA closer to IFRS, so we are talking now about the notes. Sorry. For development project, we are talking about the set of financial statement. For development project, the financial statement will be made up of the resource usage table, the budget execution table, the cash reconciliation table, the balance sheet, the operating account, as well as the notes. So you discover that here, instead of talking about the income statement, we are talking about the operating account, taking in further, because here we will not even have a balance, we will not have a negative balance, or we will not have a positive balance. Here we are having a zero balance. There is a way to at the end of the accounting period, in order to render the balance to be zero. So there is no balance. We have the budget execution table, which is just a simple table that is showing the budget versus actual. So in NGOs, this is normally what was called the budget versus actual table, and most of the financial reports of NGO was made in the form of budget versus actual. The resource usage table will show where the resources came from and what was done with the resources. When you look at the resource usage table, it is likened to, it's just that it is put in a different way, but it's likened to the balance sheet, because the balance sheet equally, that is the definition, where the money came from and what did we do with the money. So you discover that the way the balance sheet for development project will be presented is not the same way the balance sheet for professional orders will be presented, because they don't have the same terms. Though all of them, they have the same chart of account, it is one chart of account, but there are account numbers that are specific to association and professional orders, and there are other account numbers that are specific for development project. So we have the cash reconciliation table and so on and so forth. We are going to see that in details, and especially in part 2 of this recording. So the financial statement form an inseparable whole. So you are not picking, in this financial statement, you are not picking some and leaving some, unless you fall under what is being defined in Article 6. But here, when you are doing with respect to the professional orders, you have to do the balance sheet, you have to do the income statement, you have to do the cash flow statement and the notes. If you are presenting your account and you are a development project, you need to present all these elements. You need to present all these elements, unless there is an exception, which is going to be defined in Article 6. So the financial statements are prepared and presented in accordance with the formats or the templates of the accounting system for non-profit entities. So here they are precising that there is a template, there are models that have been provided. So you are not supposed to create your own models. You are supposed to use the model that were provided. So for us in Cameroon, to obtain these models, we go online to the taxation website. At the home screen, you are going to see the templates there that you can download. So any entity that correctly applies the accounting system for non-profit entities is deemed to be to give a true and fair view. So if under normal circumstances you follow these rules, you present the account using the templates, it will be considered that the results there, the elements that you have presented shows give a true and fair view of the situation and operations of your entity. But if you yourself you discover that the information provided do not really give a complete view of your entity, then you are obliged now to provide more information in the notes. You are required to provide more information in the notes. And remember that the notes have but significant information. The notes has significant information. You don't just take any type of information and you go and put in the note. If you have commitment that if it fails, it might impact the entity existence, then you need to discuss that in the notes. If you have a large amount of amortization, that is for professional orders and association, if you have on your balance sheet a sum of amortization that was constituted, which is a significant amount and which does not give details in the balance sheet, of course, you are permitted to give more details or a breakdown in the notes. Not that just for any information, you just go to the note and you give additional information. So there are additional information that might become useless and that are going to sum the significant information in such a way that, because there are some organizations that do it like that, they know that they are obliged to give more information on an aspect, but they are reluctant to give it, but they know that if they don't give it, they might be sanctioned by law. So what they do is that they give that information, but in addition to that information, they give much other information that comes in such a way that the information in the notes will be cumbersome and the users of the financial statement will feel reluctant to read all the information, and at the end of the day, they'll just let go. So Article 5 states that the annual financial statement referred to in Article 4 are made mandatory in whole or in part depending on the size of the entity. So here we're saying that in Article 6 there is an exception because they said the financial statement form an inseparable whole. So that when you have a set of financial statement, you should present all. But now they have decided to break it down for very small entities. So if an entity is very small, then they will not be obliged to present all those sets of accounts. They are going to present the account following the minimal cash system. So we need to understand that the OHADA Uniform Act for non-profit organization has the two methods of keeping accounts or presenting financial statement. We have the standard system, or what we call the system normal, the normal system, and we have the minimal cash system. So the minimal cash system now, Article 6 now gives the condition to present your account following the minimal cash system. And what we will say based on our observation for the moment, what we will say is that only association and professional orders can keep their accounts following the minimal cash system, not for development project. Development project, it has not been previewed. The minimal cash system has not been previewed for development project. It has been previewed only for association and professional orders. So small entities that are subject, unless they opt otherwise, to the minimal cash system, abbreviated as SMT. Equally here, we have decided to maintain the abbreviation of the French version because putting MCS, it might not be familiar. We are familiar to see it in French as SMT, Système Minimal de Trésorerie. That is why we decided to keep the abbreviation. You might wish to use other abbreviation, but for the moment, OHADA has not provided any English abbreviation for that. So the threshold is less than 30 million. So if you receive grants lesser than 30 million per year, or in the equivalent in the legal currency of the member state. So we don't know, maybe the 17 member state of OHADA might, one of them might be having a currency that is different from France CFA. So that is why they are just putting this additional wording to make sure that it takes into account all the currencies that might be even in future. So if your grants less than 30 million, then you are authorized to keep your account following the minimal cash system. If contributions and other incomes are less than 30 million, then you are authorized to keep your account following the minimal cash system. If donations and bequests are less than 30 million, so bequests are donations done through your will. So, for example, you say if you should die, the building should be given to a charitable organization, your vehicle should be given to this association, and so on and so forth. So, that is what is considered in this case as bequest. So, if they are less than 30 million, then you can present your account following the minimal cash system. If for development resources, if they are less than 30 million. But remember that these are cumulative. So if you have 10, 10, 10 per rubric and the total income is above 30 million, note that you are supposed to present your account following the standard system or the normal system. So these amounts are cumulative, they are not independent. They are not that you should for each. If you arrive 30 million, it is for each because that is the income that somebody might be that an entity might be receiving, but they are cumulative. If you have more than one source of income, the total will be what is going to be considered. So other resources, that is 30 million. The other resources are the resources that have not been mentioned above. So those are the threshold. So if any of the resources mentioned above exceeds the specific threshold, or if cumulatively over 2 years the resources exceed the 30 million or the equivalent, then the entity is eligible for the normal system or the standard system. So what I always advise is that there is no advantage keeping your accounts using the minimal cash system, except for the fact that you have lesser information to produce, it's easier, and so on and so forth. But then you are going to change all your accounting processes when you now have exceed the threshold of the minimal cash system, which will be an additional work. So at the beginning, I will just suggest that you put in place your accounting system with respect to the standard system or the normal system, such that even if your income is less than 30 million, and when your income becomes more than 30 million, you do not have any adjustment to do in your accounting system. So you will already be doing it, and there is no sanction for providing your account with respect to the standard system, whereas you would have been presenting it with respect to the minimal cash system. But the reverse is true. There is a sanction. There is a sanction if you were to present your account following the standard system and you instead presented it following the minimal cash system. So Article 7 tries to give a brief composition of the elements of the balance sheet, of the income, of the financial statement, saying that the balance sheet has the assets and liability as well as the equity. So on the credit side of the balance sheet has liabilities plus equity. Now we always try to reiterate that it is liabilities plus equity, because at first we'll just say the liability side of the balance sheet, forgetting that the equity is not a liability. The equity does not fulfill the definition of a liability. A liability is a present obligation as a result of a past event that will lead to a future outflow of cash. Oh, yeah, so that is a liability, which the equity does not fulfill that definition. So it is not a liability. So the income statement for association and professional orders will list the revenues and expenses, showing a net surplus or a net deficit for the fiscal year. So you discover here that, as we said earlier, we will not be talking about a profit, we will not be talking about a loss, but we'll just be talking about a net surplus or a net deficit. So all amortization, depreciation, and provision must be made during the year. This is only for association and professional orders. Only association and professional orders are authorized to keep to constitute amortization or depreciation or make provisions. Only um, professional orders and association. Development projects are not required to, they are not obliged to keep amortization. Different ways are previewed in order to record their assets. Uh, Different ways are previewed in order to record their assets, so they don't need to do amortization. But in their personal accounting, they might opt to do it. They will not sanction them for doing it. But if they present their account following this Uniform Act, then there will be no issue. So remember that amortization and depreciation are often used interchangeably, but amortization will amortize what are intangible and will depreciate what are tangible. So the balance sheet for the fiscal year distinctly shows on the asset side, we have the fixed asset, current asset, cash asset, and exchange rate differences on asset, what we call in French écart de conversion active. On the liability side, the stable resources, so these are long-term resources, current liabilities, cash liabilities, and exchange rate differences on liability, what we call écart de conversion passive. The income statement for the fiscal year shows revenues on the credit side and expenses on the debit side, distinguished by what? By their nature. For development project, the operating account shows expenses without amortization or depreciation on the debit side and on an equivalent portion of resources on the credit side to achieve a zero balance for a fiscal year. So we are going to see how to do this in our part two of this presentation. So at the end of the year, there's a recording that is done between class 4 and class 7 in order to bring the balance to zero, because you know class 7 is the revenues account. So at the beginning, we are going to enter our transactions and we'll be going to entering our expenditures. We're going to be recording our expenditures in class 6. Then at the end of the year, we'll pass an equivalent, we'll record an equivalent transaction in class 7 so that it should give the equivalent revenue which will come and compensate the expenses of the period so that we achieve a zero balance. So the cash flow statement for the fiscal year shows the net cash at the beginning of the year, operating cash from operating, cash from investment, cash from equity, cash from external flows of funds, as well as cash at the end of the fiscal year. So this is likened to the cash flow statement that we already know for profit making entity. The resource usage table shows the uses, that is fixed asset and expenses without amortization or depreciation, the funds received, the surplus or deficit of funds received over uses, and the amount of available cash. That is what it shows. The budget execution table shows the budget for the fiscal year, disbursement, unpaid commitment, achievement, available budget, and budget execution rate in percentage. When we say in relative value, we mean in percentage. So this is what I said earlier, that is the BVA in NGO. So the budget versus actual for after you put your commitment, your achievements, and so on and so forth. So the cash reconciliation table traces cash at the beginning of the year, fund transfer received, uses of cash during the year, and cash at the end of the year. Equally, we are going to add pending payments so that if we are having 1 billion at the end of the year and we are having pending payments of 500 million, so it should be clear that, okay, though we have 1 billion, there are some pending payments that are in process that immediately we pay, they are going to reduce our cash. So the inventory book is a mandatory document on which are transcribed. So we are going to have a book where we will record all the financial statement that we are, all the elements of the financial statement that we maintain. So for professional orders and association, they will transcribe the balance sheet, the income statement, and the cash flow statement for each fiscal year, as well as the summary of the inventory operation. For entities or for development project, we will transcribe on the inventory book, we will transcribe the resource usage table, the budget execution table, the cash reconciliation table, the balance sheet, the operating account for each fiscal year, as well as a summary of the inventory operations. So the annual financial statement described in Articles 7 to 13 are accompanied by notes, what we were first of all calling annexes. So these notes, in the notes, we have cross references. So when we put on our balance sheet amortization, we'll put beside amortization reference, we'll put A1, for example. Then when we go to the notes, or we'll put 6.1, for example, or 6A or A6 or something like that. So when we go to the notes, we know that directly we'll go to note 6, number A or number B, in order to look at the relevant information concerning that amortization. That is what we mean by cross referencing. So the notes provide additional information to that presented in the financial statement. So whether it be the balance sheet, the income statement, operating, all those elements of the financial statement. So we said earlier that the information put in the note should be significant information. The information should be significant information. There should be information that, if not provided, or if provided, will maybe influence the judgment of the users of financial statement. So if you know that an information has no impact on the attitude of the users of financial statement, then it is useless. It is useless providing that information, because it is going to make the notes cumbersome and discouraging to exploit or to read. So we should take note of the type of information that we are putting in the notes. So any changes in the presentation of the annual financial statement or in the valuation methods must be reported in the notes. Of course, the principle of permanence of methods will state that you are supposed to use the same methods year in, year out. And if it happens that you should change, you have to change any method, then you are supposed to prescribe in the notes. And in IFRS, IAS 8, I think, guides us on how to deal with these changes. So the annual financial statements of each entity comply with the following provisions. So the use of a standardized chart of account for the entity's accounting. So this Uniform Act has provided a chart of account to be used for non-profit entities. So the mandatory keeping of books or other authorized records, as well as the implementation of procedures necessary for an accounting organization that allows for reliable internal control, and where applicable, external control by an auditor. So they are just saying that you should have procedure manuals such that it should be possible for internal control should be taking place, as well as it should be possible for external control should to be taking place. So here Article 16 is just drawing your attention that procedure manuals are indispensable in non-profit organization. So at the end of each fiscal year, the administrative or management body of the entity will prepare the inventory and financial statement in accordance with the provision of this Uniform Act and prepare an activity report. So here, Article 16 is this article that is reinforming you that at the end of each year, you need to prepare your financial statement, prepare your inventory book, and prepare your activity reports. Where will you deposit these elements? At the ministry, for Cameroon, of course, at the Ministry of Territorial Administration. You need to. If you don't deposit it, they can withdraw your authorization to exist in our territory. They can withdraw the authorization. So you make sure that you prepare your financial statement, you prepare your inventory book, and you prepare your activity reports, and you submit. You submit. Normally for this year, the minister stated the 31st of March which was not really foreseeable because it is the first time that is the first year that non-profit organizations are required to present this financial statement, so it is not easy. So an administrative tolerance is normally supposed to be provided such that it gives time for NGOs to uh, appreciate, apprehend, understand, and be able to provide financial statement that they themselves they understand. They cannot just be providing financial statement that they themselves don't understand. So I think there should be an administrative tolerance that will permit them to have some time, give them some time to do it. So the opening balance of a fiscal year must correspond to the closing balance of the previous year. Of course, the principle of correspondence of closing balance sheet, opening balance sheet. There is no time lag between the 31st of December and the 1st of January. So there is no how do we call it? There is no need that financial statement should differ. There is no need that financial statement should differ. And remember that most NGOs now are going to be having 2 year end. OHADA year end is 31st. If you are in Cameroon, it is 31st of December. Nothing else. It is not 30th of November. It's not the 30th of September, maybe like for some NGOs and so on and so forth. So if you have your year end with your organization, you are going to present your financial statement at your year end with respect to what your organization wants. But remember that you will still present another financial statement with respect to OHADA as at the 31st of December 2000 and or N. Please let me not put a year because it will not always be 2024. So any compensation, so the principle of non-compensation, any compensation not legally founded between asset and liability items in the balance sheet and between expenses and revenues items in the income statement are prohibited. Yes, this is equally where maybe some NGOs might have issues, some non-profit organization might have issues because in the presentations of their statement, they always take creditors and debtors as one rubric, and they're going to portray, or they are going to present a positive or a negative amount to show if they are being owed or they are the ones owing. So here OHADA is saying that we should apply the principle of non-compensation, and we present if people are owing us 1 million, we need to show that people are owing us 1 million or donors are owing us 1 million, and that we are equally owing 1 million. We need to present them separately in their respective accounts. We don't need to compensate. So the presentation of the financial statement is identical from one year to another. Okay. So we had already spoken about the permanence of methods. It equally has to do with the presentation methods. So each items in the financial statement includes the figure for the corresponding item for the previous year. So we are talking about comparables. Still, since we want to bring it closer to IFRS, we know that when we are presenting financial statement, we should be able to compare it in time and in space. In space mean that we should be able to take your financial statement and compare with a corresponding with the financial statement of a corresponding organization, of a different organization. We need to be able to compare it. That is comparison in space. Comparison in time means that we should be able to compare your financial statement of this year with that of a previous year or with that of last year. So that is why you are required to present the figures of last year, be it in your balance sheet, be it in your income statement. But what we will discover that in 2025, the first year, which is for the financial statement ended 31st of December 2024, you can have the comparable values for your balance sheet, because of course the balance sheet is at a particular period. So if you do an inventory on the 31st of December 2024, you will have the balances at that period and you'll be able to have the comparables for 2023. You can do your you can do your inventory for us at the 1st of January or 31st of January 2024, and you have the values, the opening balances of 2024. You can have the opening balances of 24. But you will not have opening balances of the income statement or the operating account. It's not possible. You will not have, because you were not keeping those accounts. They are not values at a particular time. They are cumulative values and so on, and so forth. So for the presentation of account for the first year, you are authorized to have comparables just for the balance sheet, but not for the income statement. So when one of the figures in a financial statement is not comparable to that of the previous fiscal year, the latter must be adjusted. The lack of comparability or the adjustment of figures is indicated in the notes. So if you discover that the way you presented a figure last year is no more the way you presented this year, and in such a way that the values are no more comparable, you should adjust the previous year value, and you should provide information in the notes to say why you adjusted the value and the impact that it has had on their financial statement. For the first year of application, the entity is only required to fill in the N-1 column for the balance sheet, not for the other uh, accounts as I had earlier said. So the control method. So we have seen in chapter 2, chapter 1 was general provisions, chapter 2 was the financial statement. So we have seen all what constitute the financial statement. I still repeat that there are two sets of non-profit organization. We have on one hand association and professional orders, and we have on the other hand development projects. So we have seen the different components of the financial statement with respect to those groups of non-profit organizations. So let's look at the control methods in chapter 3. So a register of donors is established for each non-profit entity for all donations, gifts, and bequests received by the entity. So you have a register, you have a book where you will put the name, surname, or the name matricule for the organization from which you receive, or from the person that you receive. You need to record all the information so that it can be traced. One of the uses, one of the reasons of the put in place of this Uniform Act is to fight against money laundering. So now OHADA will be able to see where your money came from and what you did with the money. So they are able to vet, what we call vetting or screening. They are able to screen your donors to understand where they are taking their money in order to finance your activities. It is really to fight against money laundering. So you need to do this register, and this register needs to be signed. And when you be going to the Ministry of Territorial Administration, I think they need to paraffin it. They need to put their stamp on it so that it will become an official register. So the information that it will contain would be the date of the transaction, the names, first name, residence, email addresses of physical donor, or the name, register number, tax identification number, address, registered office, and email address of moral donors, the amount and method of donation made available. Maybe it can be cash, by check, by bank transfer, or something like that. All entries in this register must be signed by the legal representative. So if you are it can be the general coordinator, coordinator general, it can be the resident representative, it can be the country director. Those are the uppermost, the topmost, highest person of the organization that they want to sign against that. Yes, we received this money. Yes, we received this money. So Article 18 states that the entities keeps the donor register up to date. If there is an auditor, they submit a report to the General Assembly or the relevant body to confirm that this register is well maintained. So the auditor needs to give their opinion if the register is well maintained. So if there is no auditor, then the management of the organization has to write a management letter to attest that the donors register is properly maintained. So the donor register is a different document from the inventory book. So we have the inventory book on its own, which we are going to record the balance sheet elements, we are going to record the balance sheet, the income statement, and so on and so forth. Then we have the donors register where we are recording only transactions with the donor. So every non-profit entity is required to appoint at least one auditor. If at the end of the fiscal year, they meet the following threshold. So if their balance sheet total is equal to 100 million francs CFA or equivalent currency, then they are required to appoint an auditor. If their annual resources exceed 200 million, they are required to appoint an auditor. That means annual resources is annual income, money coming in or or in kind or in cash. That is why they said annual resources. They don't want to say annual revenue because it's revenue. People are going to ignore donations in kind. So if they have a permanent here, you see it has been highlighted. If they have a permanent staff exceeding 20, so if you have above 20 employees, not casual, not consultant, but employees, those that have employment contract with your organization, if you have above 20, then you are required to appoint an auditor. So the entity is no longer required to appoint an auditor if it no longer meets any of the three criteria. So if one of the criteria are met, you appoint an auditor. See, if you don't meet any of those criteria again for 2 consecutive years, then you don't need to appoint an auditor. And if the auditor's manager you had already appointed finishes, you don't need to renew it. You are not required to renew it. For other non-profit entities that do not meet this criteria, the appointment of an auditor is optional. So, however, the 10% of the board of members can request it through the court. If up to 10% of the board of members request it, then the court can authorize that they should, the court can oblige, not authorize, the court can oblige that they should appoint an auditor. So the financial statement should be shared with the auditors at least 45 days before the ordinary general assembly, so that it should give time for the auditor to review, audit, and give their opinion. So in entities that voluntarily or mandatorily appoint an auditor, the auditor either expresses an opinion. So the opinion of the auditor is either saying that the financial statement present are regular and sincere and give a true image of the results of the operation for the past fiscal year, as well as the financial situation and net worth at the end of the exercise. So that is on one hand, or expresses with justification a reserve or an unfavorable opinion or indicate that they are unable to express an opinion. There are situations where you can appoint an auditor and the auditor comes, he is unable to express an opinion. They don't have any way to carry out their work. Maybe you did not keep accounts at all. If you were not keeping accounting at all, there is no way the auditor is going to audit. So the auditor will not say that, okay, your financial statement do not present. They will not give an unfavorable opinion. They will not express an opinion at all. Because if you are unable to audit, you don't give an unfavorable opinion, it means you don't give an opinion at all. So note should be taken. And if an auditor says that they can't give an opinion at all, it will have a very great negative impact on the organization. Donors are going to run away from you. Donors are going to run away from you. If the opinion is unfavorable too, so by the time you say we were expected to audit the account, just know that when you start reading those type of statements, know that your audit report will be catastrophic. The auditor comments on the sincerity and consistency of the information provided in the activity report with the financial statement. So the auditor is chosen by the members of the non-profit entity from among the chartered accountants registered in the order of chartered accountant or the body that holds this position in each member state. So if you are a chartered accountant, either ONECA, so here we are not very clear if it is only ONECA or those that have the CEMAC authorization equally for, because normally the CEMAC region is also considered as the CEMAC committee is also considered as an organ that regulate the exercise. But is it an accounting code that regulate a body? I am not sure. So Here, it might simply mean that chartered accountant must be those for Oneka in the case of Cameroon. So that is my personal interpretation, please. It is not written somewhere. It is just my personal interpretation as per this article. So Article 21 states that the auditor is appointed for 3 renewable terms. However, if the entity has existed or will exist for less than the 3 terms, then their mandate is reduced to the duration. So if you are supposed to appoint the auditor for 3 years consecutive, that means 3 terms would be 9 years. Then you are supposed to be existing for 7 years or for 6 years. Then there is no need appointing an auditor for 3 terms when you are just supposed to be existing for 6 years. So the auditors is appointed by the General Assembly of the entity or the relevant body by a majority of its members. So it's a simple majority, at least more than half of the members present or represented. So it's just a relative majority, or by the project funders and the beneficiary member states of the development project. So the state can require that you appoint an auditor, or the state can appoint an auditor because you are implementing the project in their country. The donor can appoint directly the auditor. This is usually done. The donor appoints an auditor and sends to audit. You yourself, you can appoint an auditor. So what is new here is that the member states, the beneficiary member state can equally appoint for you. So it should be noted. If the above majority is not met, obtained, and unless otherwise stated in the statute, the General Assembly of the entity or the relevant body convene a second call, can validly appoint the auditor when the quorum of 1/10 of the members present or represented are reached. So if in the second call it does not go, they will still appoint, because at the end of the day it is obligatory to appoint an auditor. But if they are not understanding on which auditor to appoint or on the process, that is where they are saying here. But it does not have anything to do whether somebody in the General Assembly can block the appointment of an auditor and say that we don't want an auditor. No, the law states that an auditor is obliged. So if the assembly of the relevant body does not renew the auditor's mandate or replace them at the end of their mandate, the auditor's mission is extended unless expressly refused by the auditor. So if at the end of their mandate you don't renew it, you don't replace them, then they will continue until the next general assembly. If you don't say anything, they will continue until the next general assembly. So the Yes, they'll continue until the next General Assembly. We had already said that. So that was all with respect to the control methods. So chapter 3 was talking about the control methods, all the elements. So when the entities, when either the territorial administration is coming to your office to do control, those are the elements that are going to be asked. Those are the elements that they are going to be looking at. All these elements that we have seen here in chapter 3, all the elements that we have seen in chapter 3 that are going to be looking. Do you have a donors register? Do you keep accounts? Do you have an auditor? Has the auditor audited? Have you? And so on and so forth. Those are the type of elements that they'll be using to control. So sanctions, what we call penal provisions. So if you failure to respect this Uniform Act, we have sanctions. So the sanctions are as follows. So the leaders of non-profit entities are subject to criminal penalties. So they are criminal penalties if they have not for a fiscal year prepared the inventory and establish the annual financial statement. If you don't prepare the inventory book and you don't establish the financial statement, you will face criminal penalties. If they have knowingly prepared and communicated financial statement that do not give a true and fair view of the asset financial statement. So if you prepare fake financial statement, you are subject to criminal penalties. If they have not kept an updated donor register, they are subjected to criminal penalties. So the leaders of non-profit entities that are subject to criminal penalties if they have not initiated the appointment of what the entity's auditors, or if they have not convened them to the General Assembly. So if you don't appoint an auditor, or if you don't convene them during your General Assembly, so you are going to face criminal penalties. So the criminal penalties, it can be financial or it can be a short imprisonment. So the leaders of non-profit entities or any person in the service of the entity are subject to criminal penalties if they have knowingly obstructed the auditor's verification or control, or have refused to provide on-site communication of the documents necessary. So if it comes to the knowledge of the state that during the audit, the auditor was unable to do his job because you people blocked them, you did not provide documentation, you did not provide information when they did interviews, you blocked them, the person who did that is liable to criminal penalties. So the offences provided for in this Uniform Act are punished in accordance with the provisions of the criminal law. So OHADA is just stating that it is a criminal offence to do it. But now the sanction itself, the way it will be sanctioned, is it the payment of a fine, or is it payment of a fine plus imprisonment? It will be determined by each member state. So Cameroon will decide how they are going to sanction those that did not respect, or those that were subject to criminal penalties. So, Chapter 5, the final provision, it is saying that the Uniform Act is supposed to be published 60 days from the date that they did it. That was 22nd of December 2022, and that it was to come in force on the 1st of January 2024. So here is the articles of the Uniform Act, and we have come to the end of our presentation. And we plead with you to share, like, and comment. If you have any question, please you post your question. We'll be happy to respond. And then please share this with especially the Anglophone community. It is going to encourage us to be doing the translation of such documents, and doing a brief explanation in the English. So have a nice day. See you in the comment section.